Good evening, everyone. I just wanted to do a quick trade recap on the pound yen. I've taken a couple of trades on this over the past 2 weeks, and it's been about a little over 200 pips total. So just wanted to just review these real quick with you. So we just kind of zoom in on the most recent structure here on the 4-hour chart. We'll go over the one I took last week, which was a really quick trade. So as price traded higher up into essentially this whole area here, it really set up some support, rather resistance around 196. So if we just look how price has been respecting that 196 area, and we've traded away from it each time getting a shallower pullback. We've put in a support level in the form of a trend line. So support and resistance can be angular in the form of trend lines. It can be anything really, and anything can act as support or resistance. So just keep that in mind. But anywho, so solid resistance up here at the 196 area, and then once this was established, it really started acting as support. So the trade idea was, well, I guess I should zoom out on the daily time frame. I've been anticipating for about a month this trend line retest, which we just had today or yesterday filled, which was the second trade that I took. But so I was a little hesitant about shorting this resistance, although it really, worked out pretty nicely. We caught a nice trade off of here, I think like 2 weeks ago, maybe 3 weeks ago. And then most recently, after we again fell from it. So last Tuesday, we had a nice bearish engulfing candle off of this 196 level again. And we came back up, retested it, and put in a little bit of a channel. You can see it a little bit better on the lower time frame. A little bit of a channel here. Kind of throw that in there. A little bit of a channel. Had an impulsive move out of that after retesting, and then put in a nice corrective structure. One of the things that I like to trade are impulsive and corrective structures, primarily the corrective structures after an impulsive move. So, this can be viewed as a corrective structure, and this most certainly is viewed as a corrective structure. Typically, I don't necessarily like these long, drawn-out pullbacks, and I don't really label this as a corrective structure. Technically, it is after this impulsive move, but it essentially, just hit resistance, came down, established support, or met support, and then just traded essentially right back up, to double top up here, and then we broke out of this. So once we broke out of this and started establishing this corrective structure in here, I sent to the Discord group, hey, be on the lookout. We have a impulsive into a corrective structure. Now, when you trade these corrective structures, I like them because sometimes you don't get the usual pullback trades to like a retracement level, or a trend line, or support and resistance, or something like that. But instead you get, so going back to that, it's difficult to sometimes gauge like where that true resistance is going to hit. I mean, because if we look at this structure, this was kind of the most recent support level that was broke, but it didn't really hold. We just kind of V bottomed here, and then slowly started to um, trade higher. And so it's difficult sometimes to gauge where exactly price is going to meet that turning point. But with a corrective structure, and again, with that being said, it's difficult to find sometimes logical stop loss place, because I really like to have invalidation points to um, place stop losses at. I don't like to just randomly put stop losses in the middle of price action where price is just constantly trading, chopping through. I really like to have a true invalidation point based off the narrative or the context of the trade idea that I'm developing. Hey, based off of this trade setup, price shouldn't go here before it goes here. In this case, we had that impulsive corrective with these corrective structures. Once you get that confirmed breakout, the logical true invalidation point is that corrective structure high. Price shouldn't return there if it's going to continue lower. Now, how far it's going to continue lower, that's dependent on the overall market structure. In this case, my trade idea was to trade the corrective structure breakout to the trend line that has been well established as angular support. So that was the trade idea, and as a 10-year veteran of trading, I'm a bit more anticipatory in my trading, so I anticipated this being a corrective structure. In fact, that this was a public share on the Discord here. We scroll back to last week. Like I said previously, I really was waiting for that higher time frame trend line. You can see it up here, that blue line here. But with this idea, it was based off of, price did end up dropping a bit from 196, watching this corrective structure, and then we were able to execute on that. It happened so fast. Like, this is just within an hour. It dropped 100 pips, but over 100 pips. So I was able to grab that entry initially on the 15-minute chart. We had just a very lower time frame shelf of support set up. You can kind of visualize that here. And the other thing that is important with trading is trading with, like, what's the character of the price movements? Like, what is it doing and what is it not doing? So in this case, with this corrective structure, once we kind of establish this trend line, its character or its typical nature was to find support on it, or in and around it. And again, depending on how exactly you draw this, I typically say that trend lines are basically zones of support, angular support, or angular resistance, depending on which way they're going. So you could typically draw it like this, but in this case, I just drew it simple, wick, connected these wicks. And as price was coming in, its character was to find support off of it, which was changed here. Like, it changed its character. And with that change of character, we switched bearish in the sense that we broke through an established support level here. That coincided with the break of this trend line. Now, this was on the 15-minute chart. And once we broke this, I put a limit order at right on this candle here at 20. This was my first entry. So we had still, yet to have an official breakout on the hourly chart. But anticipating that breakout to come, I opted to enter right there on that 15-minute chart. And then once we had this confirmed hourly breakout, once price closed and traded back up with this wick, I was able to enter again to go full risk on it. And then we traded it right down to the trend line. This one I took off at 10, 95.10. Same stop loss. This one I took off a little bit. So it was right about 30. So about 90 pips on this first entry. And then the second entry fell through and was able to, once we really dinged off of this trend line and closed back above it, I just opted to close. Now, had we just continued to, and just blown right through it, I likely would have held and maybe trailed a little bit more, but I just opted to take it where the most obvious support level was, and that was the trend line. As you can see, it's been respected a number of times once it was established. You know, once, twice, 3 times, 4 times, and now 5 times. So scrolling down a little bit here, I talk a little bit about why I did that. And you know, right here, solid resistance. Every time that trend line is retested, buyers step in. Wouldn't surprise me to see price run higher back towards resistance, which is why I took profit as price was running into that trend line. So that was that trade. The next trade was, again, based off the higher time frame structure and the anticipation that price would want to revisit that downtrend line from the daily chart. And on this side of it, you know, if we just drag in that sore thumb high to sore thumb low and drop our 786 in there, that was sitting just above all of these resistance levels, all of these swing highs here. On top of that, if we drag this here over to there, so we have this point here and that point looking for that intersecting line. And then also on the 4-hour chart, you can see it a little bit cleaner. We have that line as well, that, you know, connecting those higher time frame charts, or those wicks. So all that intersection was coming in right here around 98, 96.50. So I put a limit order there. And this was right prior to the Bank of Japan releasing its interest rate decision. So I said to the group, hey, it's pretty risky to hop in this, but I've been waiting for this setup for a month, and it's finally filled, obviously right before a news announcement. So I am going to enter and cut the size way down and then increase my risk. So if we scroll back here to the private Discord group, I said GJ daily chart 96.50 to 97 zones looking rather enticing. If I had to guess, the Bank of Japan announcement today is going to spike the top off that area. If price does that and then comes back inside for a retest of that 96.50 to 97 zone, I'd be interested in shorting. Later on, after doing a little bit more analysis, I did just decide to let everyone know that I just got filled on a sell limit, Again, Bank of Japan to release news sometimes, so don't recommend it really. And primarily, I just said that, for newer traders, we're just getting into the content on the Discord, and I haven't really done too much on the risk management side. So I did mention, very small position compared to my usual size, so handle some extreme volatility and not lose much. This, like I said, this was pre-planned, and because of the Bank of Japan announcement, I opted to basically double my stop loss size just because I did anticipate some volatility coming in. Typically on GJ, I'll use 30 to 50 pips depending on how the swings are. But yeah, so that was this trade. I opted just to take a 1-to-1. Obviously, for obvious reasons, I'm not trying to trade this super low until we can get some clear structural breaks to the downside, if it's going to break to the downside. Typically, how these compression channels work is they will just squeeze trade between boundaries, and then eventually it'll reach that apex, and then it'll explode or just dump one way. And then, sometimes what you'll get is you'll get those fake outs, and it'll dump that way, or it'll drop and then rip higher. So we're just kind of sitting on our hands with GJ, not trading. We're just trading those quick pops off of the confluence until we can really get some clear direction on this. There's nice levels on either side of this that we could potentially just zip to pretty quickly, aggressively, like so. Get one of these unidirectional moves. That would be nice to be able to jump on that and just kind of ride it. But until we get a little bit clearer direction, there's really no telling which direction it's going to go. So I'm not trying to gamble that. But yeah, those were the two trades most recently on GJ. Had a nice trade on Aussie dollar yesterday. Grabbed about 45 pips. I am done trading for the week, and it's Tuesday, I think. My days get mixed up sometimes, just being here. So yeah, Tuesday, and I'm done. I'm heading out of town tomorrow to go on a little camp out with the family. Just going to relax and sweat a bit because it's going to be hot. But yeah, just going to be nice. Just going to be out in nature. Just going to meet up with some friends. But regarding the Discord, if this is something that you're interested in, I will leave a link to the free community. It's free to join the public community. You do it. I am charging a fee for the private Discord, where you get a little bit more one-on-one stuff and more close interaction with me. But I do post stuff occasionally in here, about trades that I'm looking at, and but we're starting to build a library of education, mainly in the private group, but I do have plans for some basic stuff in the public education section. So I doing a weekly outlook every week. I was posting it in, I don't know, one of these other folders here. I was posting it in here, but I'm trying to be a little bit more organized, but probably switch some of this around. I did a poll the other day on some of the issues that people were having trouble with, and lo and behold, technical analysis was at the top of the list. I don't want this to be, or to turn into, a technical analysis course, so to speak. I just if you've watched any of my videos on YouTube, you know that I trade pretty basic, like just basic, simple technical analysis, trend lines, fibs, support and resistance, supply and demand, just, mapping the market, finding those invalidation points. And I try to keep it super simple. Like, I'm not a difficult trader. The more I try to complicate trading over the past 10 years, the more frustrated and confused I became. So I really try to just keep it simple, find the confluence, and really at the end of the day, guys, trading is not technically difficult. When it comes to the technical analysis part of it, what is difficult is the psychology behind trading and the emotions that creep up and the ability to just sit on your hands when the market isn't doing anything. I've pretty much just waited for GJ for a month for that trend line test that just came yesterday. And that's what you have to learn to be able to do, is just sit on your hands, twiddle your thumbs, do other things, read books, refresh on technical analysis if that's the case. Whatever you want to do, work on your psychology. But the name of the game is being able to manage the emotions. Like, technical analysis is basic, and you can find anything and everything technical analysis on YouTube for free. I'm not trying to sell people a course that they can find online for free. It's basic, right? So, but with that being said, some of the private mentor group guys did post that they wanted some clarification on technical analysis. And then the next series up is specifically about trade plan development. And then we're going to jump into risk management, because that is by and large the most important aspects of trading. It's not technical analysis. It's not the way you find trades. It's can you develop a plan? Can you back test that plan to give it confidence and to give it merit, and develop a series of just a few tools that you can use to tilt the odds into your favor. And then it's all about risk management, self-discipline, patience, and just waiting for the market to show its hand, tilt its hand, and show you what it's wanting to do. So, and then also faith is a very large part of my life as a father, as a husband, and as a trader. So every time I read my Bible, I'm looking at it through the lens of a husband, a father, and a trader. Because those are the three main things that I do, that I identify, have that identity in: being a father, being a husband, being a trader. So when I look at the biblical lessons that are involved, that are relatable to trading, I'm putting my thoughts down when things come across, and building these cool little things that my 11-year-old daughter has taught me how to do on Canva. But yeah, so at the end of the day, it's more of like can you become disciplined enough to do what you need to do when you need to do it? And at the core of trading, that's what it is, right? We're all going to go through peaks and valleys. We're all going to have those ups and downs, just like the market does, right? The ebbs and flows. We're all on a roller coaster of life together, and that involves with our trading. But how are you going to manage that drawdown period? I just posted today about my progress so far this year. It started slow. My dad passed away in December of 2024, and I didn't take any trades until the last 2 weeks of January. And then February was pretty decent. March was kind of bust, break even. And then April sucked, right? I think I took maybe about 15 trades or so and like lost over, half of them, or more than half, like 70% of them were losers. So like, how can you trade through this without blowing up and then roll right into a month like May, and now June is going well? How can you learn to trade through those valleys? That's what we're trying to accomplish here and teach you guys at Trading by Faith. That's like the whole idea. Because when I learned to be humble, when I learned to really just sit on my hands and learn to just say, hey, in order for me to be successful about this, I need to cease whining and cease reveling about all the bad things that are happening to me with this trading business, right? When I girded up my loins like a man, says Job, and really took responsibility for what I was doing and the issues that I was causing myself. It wasn't the market causing my issues. It was myself, with the trading psychology, the emotional issues. Trading's tough, I'm not going to lie. It's not going to be an easy endeavor. But if the Father's put it on your heart to embark on trading, you owe it to Him to seek His will, right? So that's kind of the goal that I'm trying to accomplish with this. Like I said, I don't want it to turn into some signal service or I don't want it to turn into a signal service or just some basic technical analysis thing. I really want to provide value to people coming in here and really help the guys that I've helped in the past from a psychological standpoint, because that is what is going to make you successful in this endeavor. It's not having the A+ setup, or it's not about learning more technical wise. Like there's so many different ways that you can approach the market and trade. Like, I know people that just simply trade support and resistance. I know people that I've talked to people in the past that do something with lunar cycles. Like, as crazy as that sounds, they do something with lunar cycles. So the approach to the market doesn't matter. I mean, I can sit here and flip a coin and it's basically a 50-50 shot whether I'm going to win or lose. All right. All we're trying to do, increase that odds just a smidge. That's all you need to do, and not fudge it up in the middle by taking random dumb trades or going full margin on your account and, being on a hot streak where you have won 6 trades and on that 7th trade you go full margin and blow up your account. I've been there, I've done that. No more, right? If you want to last in this game, you cannot do that anymore. You have to really just be humble, take it on the chin when it's your time to lose. Ecclesiastes says there's a time for everything. There's a time to sow and there's a time to reap, right? I think I posted about that in here. Yeah, right here. For every matter there is an appointed time, even a time for every pursuit under the heavens. Time to seek and a time to lose, a time to keep and a time to throw away. There's a time that you should hold on to your trades and execute those trades, but there's also a time to get rid of those trades that aren't working in your favor, that are hitting your invalidation levels. Gird up your loins like a man and stop doing dumb stuff. If you want more help with this, if this has spoken to you anyway, in any way, I will leave a description. I will leave a link to the Discord. You can join for free. I'm going to be posting, my time primarily is focused on the private sections, but I do post in the public community. And I will continue to start posting some more of these biblical lessons. And I don't want this to be like a religious group or anything. Obviously, I think it's important for everybody to develop that, but everybody's free to make their own decisions, and I'm not one here to preach to you. I just want to impart some of the wisdom that I've gotten and I'm still getting, whether it be through the biblical Stoics or the other Stoics that are from history. Marcus Aurelius, all those types of guys, they had a lot of wise insights into how to manage ourselves as humans. And I think there's a lot of carryover to that in trading. So I'll post a link to the Discord group in the description of this video. And like, subscribe, leave a comment if you so choose. Take care, and I'll be praying for blessings over you.